NPLs and margin disappointed the street. On the other hand, EBITDA and profit met street expectations. Latha Venkatesh joins in now with more details. Latha, we had the management first on CNBC TV 18, but clearly the stock didn't take notice of the fine print that they had pointed out.
Well, the markets have been focusing on the asset quality, and there the slippages, fresh NPLs created, came in at 5,600 crore compared to 5,900 crore last quarter. A bigger dip was what the market expected, probably closer to 4,000 crore. So the fresh generation of NPLs did have those holding long positions scurrying to wind down. The gross NPA look higher at 11.1% compared to 10% last quarter, but that's entirely optical. That's because the balance sheet itself has shrunk. They have degrown, I mean, the correct word is contracted their total amount of loans by about 40,000 crores. So as a percentage, it looks bigger. Otherwise, the actual rise in gross NPLs is not very much. It's about, probably 4% or thereabouts. That's not a great deal. The positive, to be fair to them, is that the operating level performance has improved. The EBITDA was higher than expected, profit was higher than expected, NIMs were higher than expected, net interest margins, and that's because they could increase the amount of low-cost deposits, current and savings. They could bring down the amount of bulk deposits, wind down some of the unprofitable international loans. So they've done a lot to the balance sheet to make the margin look good, but the slippages are hurting. The management's commitment was that by the fourth quarter, they will definitely try to, they will succeed in bringing down the quantum of GNPAs.
All right, Latha, thanks for joining in with those details. Now, Bank of Baroda explains to CNBC TV 18 in an exclusive interview earlier today that a chunk of the slippages this quarter was on account of a one-time activity. Take a look.
Odd crores of slippages. We have 1,200 crores that has happened as a one-time activity because of certain other accounting and various other things we have been doing, which essentially is looking at portfolio at a micro level, small customers, to see any one of them should actually have been treated as an NPA, and for some reason they have not been classified as so. When I then come back to the balance, which is 3,800 crores, it is by and large equally distributed between the corporate, the MSME, the retail, agriculture. Then when I look at the corporate segment, the slippages, are around 1,350 crores, which by and large are matched with the recoveries we have made.
Okay.